In recent developments, major banks, including JPMorgan Chase, are facing intense scrutiny and legal action over their handling of customer cash. The core issue revolves around the low interest rates paid on idle cash deposited into sweep accounts, a practice that has sparked outrage among customers and drawn the attention of regulators. JPMorgan Chase, along with other banking giants such as Wells Fargo, Bank of America, and Morgan Stanley, is now grappling with class action lawsuits, alleging that these institutions have been profiting excessively from customer cash while providing miserably low returns. The lawsuits focus on cash sweep accounts, financial instruments designed to automatically move excess cash into interest-bearing accounts or money market funds. However, these sweep accounts have been criticized for yielding significantly lower interest compared to other investment options. The complaints come amid a period of high interest rates, with the Federal Reserve's benchmark rate sitting at 5.25% to 5.5%, the highest in 23 years. Despite this, many banks have been accused of paying substantially less on their cash sweep accounts. For example, JPMorgan Chase is accused of using these accounts to generate large revenues for itself at the expense of its customers, who receive minimal interest on their deposits. The plaintiffs argue that the bank's practices not only failed to deliver competitive returns, but also involved deceptive practices in disclosing the terms and rates of these accounts. The controversy has led to an uptick in regulatory scrutiny. The Securities and Exchange Commission, that is SEC, is investigating several banks, including Wells Fargo and Morgan Stanley, over their cash sweep practices. The SEC's inquiries are aimed at determining whether these institutions have been transparent about the rates paid and the potential conflicts of interest involved in these accounts. Wells Fargo, in particular, has acknowledged being in resolution discussions regarding these issues, while Bank of America has also disclosed an ongoing regulatory review related to its cash sweep rates. This situation highlights a broader issue within the financial industry, where customers' idle cash is being managed in ways that may not be fully transparent or favorable to them. While some banks have begun to adjust their cash sweep rates in response to the backlash, the legal and regulatory challenges suggest that this is just the beginning of a larger reckoning for the industry. So, the current legal battles and regulatory investigations signify a critical moment for transparency and fairness in financial services. As the Federal Reserve signals potential rate cuts in the coming months, the outcome of these lawsuits and regulatory actions could reshape how banks handle customer deposits and sweep account practices in the future. Stay subscribed for more videos.